All right. Welcome to our webinar. Good morning, good afternoon. It's good to see you all here. Thank you for taking your time out of your day to spend some time with us. Grab a coffee, take a seat. Got my coffee right here. We're in store for some good content today. We have a lot to cover today. We will try to get through it in a timely manner and respect your time today so you can get on to lunch or have some more client meetings. But we wanted to get this in front of you today. Why volatility presents an opportunity for advisors. We have been talking to a lot of advisors over the last few weeks, and right now is a really crucial and critical time in your clients' lives, and they're being bombarded with a ton of interactive media and confluence of factors in this market and what they're seeing on TV and in the news and all that. So we decided to put this webinar together to really hit on some of that stuff and maybe even help you put yourself in the position of a client, sit yourself down on their side of the table. But ultimately, we also know that this can provide a crazy opportunity for you as an advisor to grow your firm, to expand your practice, and ultimately help more people. So thanks for joining us today. This is the Why Volatility Presents an Opportunity for Advisors from Gratūs Funds. We'll go through the agenda here. We'll make some introductions. Then really we'll dive into the meat of it, and you'll hear from my partner, Skip Johnson. And we're gonna go through maybe some new concepts today. It's really about how your clients are making decisions, followed by what your clients are currently facing and seeing where opportunity may present itself and how you can be positioned as a leader and a guide in that space. And ultimately how Gratūs fits into that. We're here to help, and we're here to equip you to provide an amazing tool and really meet the market where they're at and meet your clients where they're at. You can see our little mountain in the background. This is some of the brand imaging that Gratūs has. You'll see that throughout. It's really this concept of taking your mountain and providing people the fuel to take the mountain that they have in their lives that are based on those dreams, goals, and aspirations. And we'll talk about that in just a little bit. But first, as always, our legal team had to put this together for us. Just to throw this out there, we will not be selling or soliciting any securities here today. We do have securities that are offered through WealthForge Securities, LLC. We are not affiliated with them. And today's conversation is really about getting a lay of the land. And these are our views and not the views of WealthForge Securities. With that all being said, let's dive in. So the role of an advisor. You are an advisor. You have a heart to serve your clients very well, and you're dedicated to building a great business. But whether you're putting on a suit and tie in the morning, whether you're putting on a dress and heels, whether you're logging into your Zoom meeting with a suit on top and pajamas on bottom, you really have a tough job. And every day you are faced with a conversation with clients about some of the most meaningful areas of their life. Outside of their friends and family, you probably know more about that client's dreams, goals, and aspiration than anyone else. And your job is to help them get there, whether it's saving for retirement in the accumulation mode, or when they're in retirement, just trying to make sure that they don't run out of money. Really, it is a tough job, and that comes with a lot of weight and responsibility. And we get it. We've been there before. Myself and Skip both came from one of the fastest growing financial firms in the country. We have served over 3,000 clients, managed over $1 billion of client assets, and grew a firm from zero to those numbers in about 7.5 years. And we're going to be sharing some of the insights that we have heard in our time as in that industry, but also some of the things that we're seeing right now in the market that we're hearing from advisors across the country. So there's my face there on the left. My role was to grow and scale a financial firm. So based here out of Minneapolis, we, like I said, grew a fast growing financial firm from $0 in assets to over $1 billion. We hired dozens and dozens of people over the time, made some acquisitions, and it was a fun ride. And my role in there was really to build and systemize that out. I was the COO, CFO type of in between there, and make sure that we were scaling in a systemized and efficient manner. And then Skip, thanks for joining us today, Skip. Skip was the founding principal and a senior advisor on our team. And Skip, you are a wealth of knowledge. I'm excited to hear what we have to talk about today from you. But Skip Johnson not only worked with clients, but you have trained thousands of advisors around the country, helping them market their firm to prospects, put together a good sales tools and a sales process, and ultimately treat those clients to the best of their ability. So thanks, Skip, for joining us today.
You bet, Austin. Glad to be here. So between the two of us, we know how to sell it and how to not get in trouble selling it. So thanks for your part in that, Austin.
Most of the time, yeah.
Yeah. It's a wild day in Minnesota. We've had a snowstorm, so we're part of the frozen chosen up here. I hope maybe that you're somewhere with palm trees and warm sand, because we could use it. This is the time of year we wonder why we live here. And then with 9 months of just thinking this is the greatest place ever. So glad to jump in, excited to have some content that is timely, that is really for right now. And we're gonna be talking about how clients make decisions. And the reason I say it's right now, right? I can pull up, if you can see this in there, it's Wall Street Journal, and it says Biden calls Russia's moves an invasion. So there's lots of stuff happening, high emotion, and we're gonna have some tips. We're going to have some education that you can implement even right now, I think, to help guide your clients to better outcomes. So it's timely. So glad you're joining us today, and stay tuned on as we run through this. So how clients make decisions. Maybe don't need to tell you this, but hint, it's not always totally logical. And so what I'm going to introduce today is what we've coined our decision-making framework, and then an opportunity framework. And understanding this is going to help you make the most of the opportunity of the current volatility, but it's just going to help you serve your clients better. And so jumping in, let's talk about how we make decisions. Now, we're right-brained, highly logical financial advisors. We're practically robots. We never make poor decisions, right? Nobody, just me? Okay. Would you believe that even for us financial nerds, 95% of our purchase decisions take place unconsciously, according to Gerald Zeltman from the Harvard Business School. Tony Robbins says it this way: everything you and I do, we either do out of our need to avoid pain or desire to gain pleasure. Okay, I could say that another way. Fear of loss or desire to gain drives just about everything. We make decisions emotionally, and then we justify them logically. Okay, so that's what's going on. That's the underpinning that you're facing, that your clients are facing, and it's in everything we do. When it comes to money, what we know is that not each one of them, if I've got my different components, they're not all equally weighted. Clients are deathly afraid of a loss. In fact, loss aversion, if you get into the behavioral finance, it's a fascinating science. We'll find out that loss is nearly twice as painful as gains are fun. Okay, which can lead us to making dumb decisions. Now, I know. That's everybody else and not you. Well, even if it isn't you, we're dealing with emotional beings. And in your job, as Austin said, we look buttoned up in a suit, we look all professional, but really we're part therapist. We're guiding people as they're worried, as they're scared, and money's emotional. And so learning and understanding and applying this decision-making framework, actually applying what I call the opportunity framework, can make you a better advisor and serve your clients well today. Now, if I look back, why, if I'm an emotional being, why can't I look back and see just a litany of terrible decisions, right? Like I resent that idea that I'm just emotional. I always had good reasons behind it. So does everybody, because our conscious mind will always make up reasons to justify our unconscious decision. Okay, so this is the underpinnings. Emotion first, logic is next. So in our framework, there's a Venn diagram. What we have under this is we have fear of loss, and that is deeply rooted. It's tied to Maslow's hierarchy of needs. It's primal. We can hardly explain it. Sometimes we just act out of it. And then the desire for gain, or the worrying I'm not gaining as much as other people in an Instagram generation. We're just going to call it hashtag FOMO, right? So FOMO, the fear of missing out, that's another one. So fear of loss, desire for gain, or FOMO. Those are the two drivers that make a lot of our decisions. And then we look for logic to help with it. Now, I'm going to make the bold claim, and we're going to give you 4 strategies today of how to apply this framework and have it be an opportunity that right now we have a unique spot that actually, whether you led with logic, fear of loss, fear of missing out, there's a sweet spot in there that when you see it, understand it, and know it, you can serve your clients well right now. And that the timing is unique in that. Oftentimes we make some bad decisions emotionally. Right now, these decisions could move people toward you helping shepherd and steward your clients to wise moves. So let's talk about fear of loss. Now, why would we be afraid? I mean, last year, it was a great year. The stock market's done almost nothing but go up. Since 2009, March of 2009, it's been up, 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 up. Well, loss aversion is so strong that it can lead to negativity bias. Basically, in other words, we put more weight on bad news than good news. So you're thinking, hey, we had a great year. It was all-time highs. You're calling your clients saying up 27%. Had a tweet from CNBC on the bottom right there, new all-time high. I think they retired that tweet because they would have had to post it 70 times in 2021. It padded their retirement accounts. They've got more now, more to lose. And then we got a chart. Here's 20 years of the S&P 500, and just even 2008, it's just a blip on the radar at this point, right? Up, 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 up. And your clients are seeing this, and what are they asking? They're wondering, when is the other shoe going to drop? There's a big fear of loss of losing what I already have. And what might be adding to this? I showed you, something on the Wall Street Journal today, but I could have pulled these out. This was, today, geopolitical tensions, Russia, Ukraine, stocks end sharply lower, inflation woes, inflation, Ukraine invasion, more stock volatility, stocks tumble as tensions at the border intensify. And it's out there every single day. And we know it, that bad news sells. And we can try to tell people to stay in there, but they're getting bombarded with this. You cannot wake up, look at your Apple News app, and not be bombarded with the stuff we're talking about today. Understanding that it does drive your investor and your client's framework is going to help you shepherd them. What else is happening? Just call it continued COVID concerns. We've got inflation, 40-year high, 7.5%. So suddenly my money that's sitting in the bank account is losing, but I'm paralyzed by the fear of investing when the stock market's at a high. And what about Ukraine? And what about interest rates? And what's the Fed going to do? See, I love this article from the New York Times here in kind of the middle right. It said for 2 years, the stock market has largely been able to ignore the lived reality of Americans during the pandemic. We dealt with 2 years of disruption, of isolation, of kids at home, of an upended work-life balance, and the stock market kept trucking. It even seemed to accelerate. And what we're experiencing is we're talking with clients, we're talking with advisors. I know, you wish you weren't having the conversations too, really, like another COVID conversation, another conversation about a variant or inflation or all-time highs or when's the market going to drop or market timing. These things that go on and on and on, but you can't ignore it. It's there, and there's a disconnect, and there's this intuitive sense there's something happening. So that's that fear of loss, and it's powerful, as we said. In addition to that, we've got fear of missing out, the desire for gain. And that's in your face. It is in your face marketing right now. And these primary underpinnings Take a look at the bottom left. What is that? That's the Staples Center, right? That's where the LA Lakers play. Nope. It's now Crypto.com Arena after $700 million deal and renaming. That is what you see every time they play a game. Or you got Matt Damon in the middle, shilling for Crypto.com. You're going, really, Matt? I loved you in the Born Identity, and now I have to talk more about Bitcoin to my clients. But this conversation, fortune favors the brave. And they compare all these great bold moves of the past. It's basically like, you know, if you've got some guts where everybody else is doing it, if you want to make history, you got to try something new. You got to do something different. Or how about on the right? That was 30 seconds of a bouncing QR code set to video game music. One of the most talked about ads in history during the Super Bowl. Certainly the greatest conversion ratio in history is a bunch of you grabbed your phone and you couldn't help it. We found out Coinbase. It's talking about how I can trade crypto. So it's out there, it's in your face. And if you thought the Bitcoin conversation was going away, it's not. Do you think these folks are spending billions of dollars without knowing their focus groups say that people are looking for something different? They're using FOMO, they're using fear of missing out, the desire for gain to say there's something else out there. And it's getting pervasive, isn't it? We'll just call this democratization and DIY. I've had clients come in, remember as a retail, in my retail practice, getting to visit with clients, and they come in, they're talking about doing a fixer upper, right? With Chip and Joanna, where it's fix or flip. They want to buy that duplex and rent it out because I read some Robert Kiyosaki. Or how about Airbnb and VRBO? Everyone knows somebody who's killing it on their Airbnb in Florida, right? And so what's the conversation when that happens? When they come in and they say, hey, what do you think about real estate? What's your answer? For a long time, it was, hey, tenants and toilets, and you got to have a good contractor, and just realize it's not passive, and, or some of the opportunities to invest in apartment buildings and various private placements, it was accredited only. It was cumbersome. It was incredibly high minimums. Well, folks, that's all changing. Think about Robinhood in the last year, about the rise of the Reddit bros, GameStop, just goes on and on. AMC, taking on the man, fund rise in Yield Street, letting you participate in cash flowing alternatives with relatively low minimums, investing in wine. I don't know much about wine other than I like to drink it, but that sounds like a cool investment. And it's on and on. Trading farmland, cool. And everybody's heard of someone who's made their money in their crypto or making money in Airbnb, and they're wondering, am I missing out? Am I missing out? Am I missing out? And it's out there, okay? So we're making the conversation that right now there's a unique confluence. The fear of loss, fear of missing out is driving some of the same desire, and the convo has shifted. And you know what? It makes sense. It makes sense from a logic perspective. I can't argue with some of the fears. In fact, I can build a solid case for why they might want to shift up their portfolio at this stage with the current conditions we have. So let's back into a couple of these. And, I think it's so important that we understand and can empathize with this decision-making framework. I remember in March of 2020, getting a phone call from someone they were panicked, they wanted to sell everything, and they wanted to get out. And they knew that the market was going to drop another 60%. They knew if they get out, they're at least going to miss that. And of course, I went at it with logic. I got a little irritated, talked to them about why not to get out. And because I stayed here, instead of connecting my heart, they felt unseen, they felt upset. I went and did it anyway. So understanding the emotions, saying, hey, I get it. I know how you feel. Others have felt that way. Here's what we found. And getting in and describing and empathizing and connecting and basing your practice off of this framework can really help. But from that logic side, what's going on? Inflation hit a 40-year high. If we were to add in owner's equivalent rent, basically the 40% or so of the consumer price index that notoriously lags behind, we'd see double-digit inflation right now in February of 22. And why is that happening? The bottom left, I've got a chart from the Fed. This is the M2 money supply. So M2 measures all of the cash and cash-like equivalents, savings, short-term CDs, money markets, checking, etc. It's all the short, readily available cash. And our government likes to print money. So inflation's been happening. It's been going like this pretty steadily. And then something shifted. What shifted? If you're drawing trend lines, it look like this. One sec. An unprecedented monetary experiment. Helicopter money, really for the first time, the stimmies, the stimulus money, PPP loans. We put tons of money into the economy in the midst of COVID to prop it up, printing $5 trillion or so in just a couple of years. So the money supply went way up by 20, 30%. Naturally, what's going on? Well, the money is sloshing around, and on the right side, I've got a chart here. This is the relation that our team put together. This is the relation between the money supply and the consumer price index. And what you'll notice is anytime there's been a rapid increase of the money supply, there's been a subsequent rapid increase in inflation. Got it in the late 70s, got it in the early 80s. And now we had this unprecedented thing happen. Guess what we're starting to see is that consumer price index popping as well. Now, how high is it going to go? Where's it going to go? We're not sure, but here's what we do know. What is the main tool to fight inflation that the Federal Reserve has? It's interest rates, right? JP Morgan says this week, we expect to see 9 interest rate hikes every meeting until March of 2023. Got Barron saying, thanks for the memory, 60-40. Sky high stock prices, rock bottom interest rates, an increasing tendency to move in lockstep has prompted most advisors to ditch the formula. And that's it, but really, have we? See, clients maybe aren't adept to say, I want out of that thing, but I'm going to make the case that this is a macroeconomic shift. Starting out in 1981, until now, basically interest rates have been coming down for 40 years. The 10-year treasury topped out at about 15% in 1981. And that declining interest rate environment has buoyed the return of your bond portfolio. What do we know? Interest rates down, bond values up. Interest rates up, bond values down. And I know. And I've had the combos. There's many reasons to have a balanced portfolio, to have bonds mixed in. It's a way to dampen volatility. We can reduce risk. We can have some dry powder to rebalance out of. There are some reasons, but clients are looking at this and go, I don't understand why we would be using an asset class that has an expected return of negative. And I'd maybe look and say, you know what? Given the timing and given the current situation, I'm with them. Not abandoning it, but do we want to tweak it? And then the conversation and this desire for largely alternative investments, for something different, something besides just stocks, bonds, mutual funds, ETFs, the readily accessible, as investors begin, that's all that's out there. And then largely there's been, I think of it like climbing a mountain, and there were clouds maybe obscuring some of the other stuff. Early stage seed capital, hedge funds, real estate syndications, private equity, et cetera, those kind of investment offerings weren't readily attainable. And we could justify in the past that, hey, you got to be accredited, or you have to be a qualified purchaser, or it's $1 million minimum. And all that's changing. And it's creating access, and I think forcing the conversation that we need to look at what's been out there. For many, many years, institutional investors, high net worth investors have known that private equity, alternatives, real estate had the potential to offer returns equal to or better. Most of us, we build our portfolios off some sort of the efficient frontier, right? Harry Markowitz and all that Nobel Prize winning economic theory. Well, when you mix in alts into a portfolio, what we can find out is we can actually reduce risk or increase returns. Sounds pretty good, right? And look at what Yale and Harvard are doing. Yale has a $42 billion endowment fund. They've plowed billions, tens of billions into the operating of that university over the years, and they publish it. I encourage you after this, get off this when we're done. email us to talk more, and then Google it. Google the Yale Endowment Fund, and what you're going to see is they're going to show you their asset classes. You're going to show you how they're invested. And at this point, it's less than about 30% public equities. The rest is in alternatives. So this is a time that logic, fear of loss, fear of missing out, I think can come together. So how can we play into that? What is the opportunity? Why now that we're adequately depressed, why would we be saying this is actually an exciting time for us to dig in and serve our clients? So we're going to call this opportunity framework. How do you live right there in the middle? And that's the sweet spot. I'm going to start with first, I think a way you can differentiate yourself. The fact of the matter is investing is becoming commoditized. I know we don't like to admit it, we don't like to think about it, but it's out there, right? Wealth fronts, robo-advisors, doing things for just a couple bips. Robinhood, and all of this marketing saying you don't need an advisor. You can be your own. But having a plan, clients want to be known, they want to be heard, they want to be seen, they want to be understood. I want you to talk down to them. They want to know that you know their situation, their goals, their unique plan, and that you've constructed a plan that works for them. So imagine next time that Joe client or Sandy client calls you and they say, oh, I'm really worried about this. What do you think about the market? Should I get out? And you say, hey, Sandy, totally get it. It's a crazy time right now, and we don't know exactly what's going to happen next. But you remember how when we started, Sandy, with, tell me about your goals. Tell me about your situation. I want to know what makes you tick. What kind of lifestyle do you want? What's your monthly nut? What's it cost to make ends meet? And then we say, Sandy, remember how we looked at that? And we took a peek at your pension. We strategized when to claim your Social Security. Maybe we allocated some resources to some safe money type stuff, less volatile, risky. Saying we don't know when the storm's going to end. We don't know how bad it's going to be, but we've got a plan. We can weather the storm. I'm in Minneapolis right now. It's a big Delta hub. So if I fly, typically I'm flying Delta, right? And so if I go somewhere, what am I really hiring Delta to do? I want to take off and land safely. I want to get where I want to go, and I want to get there on time. The rest of it, I'm expecting the pilot or the advisor to help get me there, right? Take off and land safely, get me where I want to go, and get me there on time. There might be a storm, but as an advisor, when there's a storm, we might go up high, we might divert over Chicago. We're going to do our best to avoid that. Higher, lower, we could get delayed a little bit, but ultimately we want to get them where they're going. And being able to connect with them, to know they're seen, to know that you're an expert, you understand them, and that you've got a plan to deal with it. It's all the difference in the world. One of the great parts, obviously, of the last year is clients, their net worth grew. And for you, our AUM grew. A lot of us had our best year ever. And this is a way that you don't have to worry about losing clients. This is a differentiator so that you can go focus on my next tip, which is just market, be a marketer, be a thought leader, get out there and make some noise. See, the good news about today is when things are shaky, people are looking for solutions. You might hate to believe this, but there are people that will be in seminars tonight, in a dinner, getting a steak somewhere at a, library, learning about Social Security, and people are out there talking, and there's folks out there listening. Zig Ziglar used to tell this story that I loved. Zig's this old boy from Mississippi. He tells a story about these couple, good down-home folks sitting on a front porch, and two guys on the rocking chair, and down on the porch is a hound dog. The hound dog's whining and moaning, and it sounds terrible. So the one friend asks the owner, he goes, "What's wrong with your dog?" He goes, "Oh, well, fixing the porch earlier, and he's laying on a nail." Other friend's confused. He says, "So why doesn't he move?" The old boy looks over and goes, "Well, I guess it doesn't hurt him bad enough," right? And that's the thing. See, when everything's been going well, people aren't moving. We were fanatical in my old practice on what was called the Net Promoter Score. This was this idea of net promoter score goes from 0 to 100 or 0 to -100. And if the number is positive, that means your clients are more apt to promote you, to refer you, to make you referable. If it's negative, better watch out. You know, one of the largest wealth management firms out there recently had a net promoter score of a 12. Okay. It doesn't take much to tilt that thing to negative where all of a sudden people are looking. Even some of the really big firms, 40s. So what can you do to be out there? I'd say right now, be out there, be speaking, increase your marketing. Another takeaway for you is research financial advisors on TikTok. Did you know some of the highest paid financial advisors on the planet right now are giving advice on TikTok, making millions of dollars? Now, you and I both know that there is no chance that they're giving as good of advice and as thorough of a plan as you who intimately knows the client's situation, but they're out there and people are listening. So explore some new channels. I know compliance can sometimes be a stick in the mud, no offense to my compliance professionals, but be unique. The world is changing. And then I would say lead with strength, okay? People want to follow strength right now. And so in that, don't just have a company line, get educated, form opinions, become an expert, and get out there and help some people. When the noise is there and all the bad news is going on, and whether you're watching, you know, you're red and blue, cut through the noise, lead with strength, and serve some people by understanding this. Last, I'm going to just end with here, have an alternative conversation. And what I mean by an alternative conversation is recognize the world's changing. The democratization of alts and alternatives, the current timing with interest rates and inflation, I think it's a perfect storm or a perfect opportunity to empathize with what your clients are feeling. Realize that you can be proactive. You can come to them instead of say, just hang in there, be long-term, and come with a proactive strategy. Or how about this? When they ask about Bitcoin or crypto or whatever, or such and such a real estate deal, what if instead you could have a carefully vetted plan or process or product that could fit, that you could recommend under your careful tutelage? It's a conversation that lands right now, given the current environment. And that's where Gratūs can fit. We are a firm built from the ground up by advisors to help you integrate alts into your process and meet those changing demands of investors. Really, it's a very simple solution. We launch alternative investment funds. Our focus is multifamily real estate, large apartment buildings, things your clients can drive by, they understand, they're relatively resilient in the face of a recession. They can be an asset that can help with inflation. It's something that's certainly more predictable than speculative, and we can integrate it into your process. One big difference about Gratūs and one differentiator that we're very proud of is accessibility. We were committed to making this accessible. We used a structure called the Regulation A structure. That means you don't have to be accredited, your clients don't have to be accredited to invest in our funds. It's available for all investors at very, very approachable minimums. All of the reasons that in the past, custody, billing, accredited status, compliance, subscription, chasing paperwork, all of those kind of things really have been very simple. Most of the cases, we can work with you directly with your primary custodian. You can bill right in it. It'll report right with your Black Diamond, Investment Tamarack, whatever you're using. We've got the fact right forms. We'll work with your compliance department to make sure that they're comfortable with it and that this can fit into your process. At the end of the day, here's how this benefits you. And here's one of our most exciting parts, is helping you be at the center of that opportunity framework. You stay their trusted advisor. Instead of just on the publicly traded assets, they know they can go to you about everything because you're knowledgeable, you have an opinion, and you don't just push it away because you can't get paid on it. So stay your trusted advisor, even with real estate, even with private equity. Build or maintain your AUM. See, the tension of being a fiduciary is this. you could have a conversation with someone who wants to invest in real estate. And I could tell them, be careful about tenants and toilets, or all the reasons that they don't want to have a part-time job managing property, and it's all true. But the other tension is if they go buy that duplex, fourplex, small apartment building, if they buy that Airbnb, that's also assets coming that are moving away. As a fiduciary, I believe it's your obligation to be able to answer it directly and not let that kind of thing mess with us. It's easy because it is one of those inherent conflicts of interest that's been there, okay? The other aspect I would say is this is a great spot to build your AUM, get assets that are on the sidelines. Right now, the data is suggesting there's tons of money on the sidelines, but it hasn't dropped enough yet for investors to buy the dip. What we are seeing as a fund literally every day is investors taking cash that was on the sidelines, excited, talking to their friends, telling people about how they're building this apartment building, they're involved in this deal. And so it's a great way to bring assets into something that could be positioned to do well, or to take some chips off the table if they've had quite a run recently. And last but not least, probably my favorite side, just give your clients something fun. And if they want it, they're worried about the current environment and logic supports it, that's a perfect fit to be able to position them into something that they're going to talk about, tell people about, rather than, oh, we like a low cost diversified portfolio and we just want you to hang in there. And I get all the math of it, right? I get that when we're investing in the stock market, we're investing in some of the greatest companies that have ever been managed, and that it's likely going to go up over time. The data going back to 1926, pull out your big book from DFA, right? What the market is averaged. But what if there's a combo that, one, is exciting, two, addresses some real risks, and they're just spot. So have an alternative conversation. And I think that it can be a great step with your firm. So recapping, have that opportunity framework, do an audit, dig in. What are your next steps? I'd say dig into your current process and look at, where am I missing out on this opportunity framework? Where am I maybe not having the conversation that I need to be having? Where am I not having the conversation and I could be? What am I missing out on? Better yet, email us. We'll get to know you. We'll get to know your process. We'll get to know your practice. We'll do a complimentary consult of where this could fit into your practice. Join us for our next webinar. The world is changing rapidly, and we are going to take it head on so that you can continue to be a thought leader. So every month we're going to be having webinars. We'll continue to tell you about them so you can be positioned to lead and to steward and to guide your clients into making wise decisions in a crazy environment. And start integrating alternatives today. Email us. My personal email is there, skip@gratūsfunds.com. We'll connect, we'll Zoom, we'll hang out, we'll get to know each other, and we'll see where we can add value and be hopefully a good wealth of information as you start integrating alternatives into your process today. So Austin, I think you're still with me here. Yep. And it looks like we had a few questions come in. If we want to open it up to a Q&A here.
That's right. Yep.
What's come through? Yeah.
Yeah, thanks for that. Sorry, I was trying to take over the screen from you and I clicked forward on you there. Yeah, we had a couple questions come in. Thank you for sending those in, everybody that submitted a question. The first question that we have is actually why we like multifamily real estate. So Skip, if you want to address that one.
Yeah, why real estate? Why multifamily? I guess first, and even just the answer I'd tell your clients is everybody needs a spot to live. And then we get into the data. It's been one of the most recession-resistant asset classes. But our founder and really kind of visionary behind the firm, Jason Weimer, he said this thing to me a while back. I was actually an early investor in a Gratūs fund, and he said, in real estate, we manufacture returns. And I thought, what do you mean by that? And he said, real estate does a lot of the heavy lifting. And as he unpacked it, I went, whoa, okay. So number one, cash flow. the way that these are built is there's cash flow or dividends paid to investors, and the amount we pay for an apartment building or the pro forma we build an apartment building off of is based on the cash flow that's expected. It's relatively predictable. So there's regular cash flow. Number two, these kind of assets are purchased with mortgages. And what's cool about that is if you did nothing else other than just operate the property, it's getting paid down. And that's adding another few percent to your client's return every year. And then inflation, it's inflation resistant because if inflation goes up, rents tend to go up. If rents go up, guess what? Cash flow tends to go up and my value follows it. So it can be a great hedge against inflation on an appreciation standpoint. So you put those all together, and it's an asset class that can have, I would say, can fit kind of between bond-like attributes of cash flow, but equity-like returns. And of course, we don't know what the future will hold, but we're excited and very bullish on the future of multifamily. I think the current shortage is 5 million units short in the United States alone, and they're estimating that there's going to be another 10 million households created in the next few years. So you put that all together, we think it's a great time to be in multifamily real estate.
Yeah, that's good. There's a couple more here.
Gotta be careful not get me started on those. I get all riled up about why we're excited about this stuff. Yeah. Sorry, go ahead.
There's a couple more that just came in during that last one. The next one is that it looks like an advisor has never had a conversation about alternatives before. Like, how do you get started in having that conversation, especially if you've never had it before? It's something that's completely different from the conversation that has been had up until this point.
Yeah, that's a great question. And I think it could feel intimidating. The reality is maybe a little less so. You try to simplify it, right? Like, what's the asset class? Why are we in it? People understand things like multifamily, like, oh, I could own an apartment building and it generates cash flow. It's not tied to Wall Street. I like that. Okay. But to take that a step further, is that's where part of our team can help. Austin, that's where you can help. That's where I can help, is we can teach you. We do things like lunch and learns with clients. We can come in, help you do a seminar to explain this. At the end of the day, our core desire is to help investors climb their mountain. And we believe that there's a tool that we have. And so if we can help you get it out there to your clients, think of me as your outsourced sales team. We'll jump in with you.
Yeah, somebody just asked to put up our emails again, so I'll do that. Like Skip said, we'd be happy to help. We'd be happy to have these conversations with you. That's why our emails are here. These are our direct emails, and just send us an email. We can schedule a time to walk through the framework in more in depth, or even talk about how alternatives can fit into your practice. We are more than happy to train staff on how to implement the subscription process and how to make it easy. The tech stack that I think Gratūs has built is far and away better than what we've seen out there, to just make it a simple process for you. It is built with advisors in mind. So, and on that note, we did have a question about billing. So I'll just go with that one. So
tackle that. Yeah.
Yeah, really what we have built is we do have multiple share classes for investors. And so we actually have a share class that is set for an advisor that is working with a broker dealer. There are fees that are built in there. You can charge a fee on the product. It's just a simple selling agreement between a broker dealer and yours. And then for an RIA, the world that Skip and I came from, you charge your normal 1% on there. Obviously the cash will have to come from either a different account, or you'll have to raise cash through a different asset. But it's a pretty simple process, and every firm is a little unique, and every account structure is a little different inside of each firm. So we're more than happy to have those conversations and work through that with you.
You bet. At the end of the day, here's what I'd say. We've been in your seat. We have a heart to help. And if you've never had a conversation about alternatives, particularly as someone who sat in the seat, working with advisors, having to answer their questions, send us an email, give us a call, and we'll dig in and we'll sort through it with you and see if it's the right fit.
Yep. Perfect. Well, with that, we are going to wrap it up. Skip, thank you so much for this. It's always good to put ourselves on the other side of the table, in the shoes of the client, and just hear what they're being interacting with right now, and what they're interacting with, and get out of our own world and our own logic brain, and start feeling and having some empathy to what they're facing. So thanks, Skip.
There's a lot happening right now, and I think the timing is incredible to be connecting, understanding this stuff, and serve your clients well by knowing them and understanding this framework.
All right. Well, thanks everybody for joining us. Stay tuned for our next one. Send us an email. We'd love to have a conversation and meet you all. So thank you very much, and have a great rest of the day.